This is Eric Muathe with Muathe.com. As US markets are just about to close, there's the bell. Let's take a look at markets after the close of this week, which is April 23rd. This video is for the weekend market analysis for April 25th, 2021. Let's begin with the S&P 500 daily. I should have mentioned in this weekend, we're going to be taking a look at US markets. We'll take a look at the cryptos by way of Bitcoin to see how it's shaping up. We'll take a look, for example, at other markets like the Canadian market and the Nifty, and we'll take a look at commodities. Let's begin again with that S&P 500 daily chart. And I wanted to begin here because it kind of explains or gives us a little bit of an understanding of why the market remains very resilient. We can see we are trading well above an upward sloping 50-day moving average. So even a pullback back to the 50-day moving average is not destructive to the market. It's a normal pullback within what continues to be a constructive to out and out bullish market. At some point, and it's going to happen, of course, at some point, we are going to break below the 50, and that might introduce some stronger selling. For now, there's frankly nothing on these charts that are screaming sell. That's going to come later. Now, if you take a look at this daily chart, there's also another way of looking at this, which might explain the recent bounce after Thursday's drop. If we take this line here and connect the prior highs of the daily RSI as such, we can see that we finally came out of this declining RSI line and we started moving higher in the month of April. So this movement here. So what we can do is take that information and draw a line as such. Now, this line, this RSI level happens to be around 61.8. And you can see at the lows of this past week, the market came to this level, held it, and now essentially trading as close to all-time highs as possible and touching all-time intraday highs today. Or Friday's session, let me say. So we can see that as long as we are trading above this blue line, as long as your daily RSI is above 61.8, expect the market to be stable to bullish. Now we can expect the market to be stable, the general market, as long as we are holding above the 50-day moving average, as I mentioned. And so here's the 50-day moving average sloping higher. In fact, we can even say with a deeper correction that holds the 200-day moving average, any bounce on any of these major moving averages is going to be constructive. Any bounce around and at this moving average is going to be constructive. It's going to take a destructive violation of the 200-day moving average later on for there to be a massive sell signal. Right now, there's nothing on these charts yet that are screaming to run for the exits. Now, another way of looking at this, take the S&P 500 daily, connect the lows of the daily RSI, and you have this trend line here. It's going to take a violation of this trend line to the downside for there to be a massive sell signal on the daily charts. Right now, it's not there. Again, there's nothing on the charts, in my opinion, that are screaming a sell of the market. It's going to take some time to set this up for a major drop. At some point, a break of this trend line again would be where we start looking for reasons to be out of the market. If we end up bouncing on this line at some point, support on this line would be constructive. So that concludes the free portion of this video. The rest of the video is for paid Muathe.com subscribers.